Good morning, good evening, and good afternoon, everybody. Hope everybody is having a fantastic day today, a fantastic week. It is Hump Day. You know that it means it's time for HUBB Live with the one, the only Mike Wade. First off, we're going to do a quick market review. We're going to talk about what's going on with the banks. Apparently, they are on fire, all of them. Then we're going to talk about our portfolio with a 91% win rate, 41 out of 45. We did pick up a nice winner there. We're going to talk about last week's trade, DBX and CMCSA. Then we're going to talk about today's trade, which I'll let you wait and see on that one. And then we're going to go over some of your questions. We're going to talk about some of your stock tickers. So let's get to it with Mike. Mike, how we doing, man?
Hey, buddy, I'm doing well. How you doing, man?
Doing good. It was a nice, relaxing weekend, and I'm ready. Been waiting for today.
Let's snipe, man. Let's do some sniping.
Yes, I got my camouflage like right over there, so I'm ready to snipe.
You're in the South. There's hunting done in the South, isn't there?
Oh yeah, a lot of it. A whole lot of it.
Yeah. Did you say something about banks being on fire?
Something like that. I don't know. Like, what do you think's going on with that?
Well, let's take a look. We're going to do a quick market review, and here's an ETF called the XLF. It's the Financial Sector Spider ETF. It's a stock that tracks financial companies, including some of the big banks. And you can see here, this stock is on fire. So this is a balance of many different financial companies. We're going to look at a few in a minute. But the financial sector is at all-time highs. And then
so it's a good on fire, not a bad on fire.
A good on fire.
Oh, good. It's like when
fire, baby. You know,
it's like back whenever bad used to mean cool.
Yeah, remember that? Yeah. That's a bad car, man. That's bad. I thought that might be before your time, but maybe not. I guess not.
It was right at the beginning, you know?
Yeah, right at the beginning. Yeah. Well, so what's been going on is banks have been announcing earnings, and I'm going to go through a few of these. This is Goldman Sachs that just announced earnings. JP Morgan announced earnings last week. BlackRock last week. Look at BlackRock. Oh my goodness, all-time highs there. Wells Fargo. Look at that. Wells Fargo announced earnings over here, gapped up, and just kept on going. Wells Fargo's on fire. Morgan Stanley just announced. Morgan Stanley setting new highs. Bank of America. Nice bullish run up here, and it's faltered a little bit. But, before earnings, Bank of America was down here. So banks are doing well. Citigroup had a good announcement, but came down. A little bit of concern around defaults. And then we have U.S. Bank Corp, which just announced big gap up. Charles Schwab, SCHW. Schwab is now above the 200-day average. These are the kind of stocks I like to snipe. And then, of course, we have the XLF. So now, why is that important? Well, when the banks are rising like that, then it has a tendency to bring the Dow Jones Industrial Average up with it. So here's an ETF, the Diamonds, DIA. This is the Dow Jones Industrial Average, 30 stocks. It's an ETF as well. And you can see here, that right there where my pointer is, all-time highs. And we came down a bit yesterday. There was a bit of a sell-off yesterday, not too much. And now the Dow Jones Industrial Average is reaching northward. Notice, of course, the support level at 420. So these are the kind of trades what I would consider sniping underneath these strong support levels. Indeed, on the diamonds, that would be an interesting trade. So if you like this kind of trade, trading ETFs, derive a line in the sand here at 420, round number, bounce. So that level has held for two or 3 weeks or so. And we are firmly above that level. That level should hold for the foreseeable future. Of course, it may not. So that's really interesting stuff. Ways to snipe based on the news of banks. We can take a look at the SPYs as well. This is the ETF that tracks the S&P 500. Similar pattern. Right there where my pointer is, all-time highs on the SPYs. We came down a bit yesterday, and we're finding some support right here at 580. All right, again, a round number so far, 3 days in a row, that level is holding. And I would expect there to be further upside on the SPYs as well. The NASDAQ, not doing as well, but still pretty good. Here's the NASDAQ chart, the Qs, NASDAQ 100. A lot of tech stocks in the Qs. And this here, right at that level there, is an all-time high for the Qs. And we're not far from it. We did have some bad news in the chip sector. ASML came out yesterday and lowered their guidance, and they tanked, taking NVIDIA with it a bit. NVIDIA's got earnings coming up in about 6 weeks. So the tech sector is not fully firm. Let's take a look at the XLK as well. I'm going to add an XLK chart here. XLK is the ETF that tracks technology, and you can see here a similar chart to the Qs. Similar chart, resistance right up here. Let's say right at the top of those bars there. So that's right about 237 or so, is all-time high territory on the Qs. So we'll have to wait and see. There's also an extended ban on chip sales internationally. That's also weighing on semiconductors. So a lot going on, but on balance, the markets are decidedly bullish. And then I'm going to show you the IWM. This is the Russell 2000. And for the first time in a long time, the IWM is now above this strong resistance level, now support at 225. So it's broken out of its range. Money's flowing into small caps. Small caps benefit from rate cuts, which we know are going to be probably coming, at least one or maybe two by the end of the year. Fed meets 2 more times this year. And that's really good for the smallest 2,000 companies in the U.S. market. So, Brian, bullish, banks on fire, diamonds on fire.
Love it.
Things are going up. Really, really good looking market, good looking bullish market. All right, let's talk about a couple of our trades that we just placed. Dropbox was a credit spread we put on the 9th, and we got in the morning. And then the stock actually has risen. We actually took this trade off the next day. We were able to sell it for 13 cents. You can derive that there, 13 and 14. There's our 13 cents credit times 100 shares controlled, $13. We did it 5 times, $65 of total credit, and a max risk on this trade of 435. All right, so this came off the next day. We bought this back for a penny, and that was a really nice little win over just a 2-day period. Comcast was another. Comcast we put on 10.2, and then on 10.15, which was just yesterday, we pulled this trade off again for about a 13% profit. Once we bought the spread back for a penny, that we sold for 13. Both of these trades were taken off with a GTC order to buy the spread back for 10% of the original credit, netting 90% of max profit. So Ryan, those 2 setups were really, really good. And there's more. Now, I think Ryan mentioned this, but if you have any stocks you want me to look at, or you have any questions, please put them in the chat box, and Ryan will bring them to the table. All right, let's do some trading, Ryan. I'm going to go right into the software, click the AI button like I always do. Now, the signals, the most recent signals are for yesterday. And again, what I'm looking for are scores greater than 75 or less than 25. And I see none of those here. I'm done with the bulls for yesterday. And I look at the bears, 53. So again, no, these thresholds haven't been met on any of the setups from yesterday. But when I go to Monday's data, let's put the bulls up. We get this beautiful, beautiful setup on Cisco. All right. And we also have another one on Lending Club. We'll look at both of these. So here's Cisco. And it has an 83% chance, well, let's call it a confidence level, that the stock will continue up to 57. And then that means a 17% statistical probability that it's not coming down here to 50. So what I like to do on these, as you know, is I like to sell at or below the fail zone. But because the stock has motored up so much, there's no credit down there. So I've got to figure out where I want to sell my credit spread. It's going to have to be higher than 50.63 in order to get enough credit. Now, there's a bonus on this trade I want to really point out here. Notice that I have a line right here at 54.50. Why has Mikey got a line there? Well, look left, keep looking left. And what you'll see over here is a resistance level right there. All right, so here, this was way back in October of last year. So over a year ago, this level at 54.50 held, stock came down. It's done its dance for a year. It's made a strong run. And then what makes this an even better opportunity for today is that now the stock has gapped up above this very strong long-term resistance level and done so. It looks like it's going to be above average volume today as well. The volume is already high with 4 hours to go in the market, roughly 4.5, a little less. So there's some volume here suggesting that the stock doesn't have much of a chance to come back down below this 54.50 level. So I like this one a lot. The other thing that you must check is earnings. All right, so we don't want to put these trades on when earnings is within a couple of weeks. Why? Well, the problem with that is that implied volatility or the expense of the options increases, and that hurts a credit spread. It makes them more expensive. So you sell a credit spread and earnings is approaching, that credit spread can gain in value with IV rushing in. And even if it does make money, you'll make less money on the IV rush. So check that. So earnings on Cisco. Where are you, Mike? Well, I'm in earningswhispers.com. It's a free place to check earnings. And there's many places. This is one that's really straightforward. So I've typed in this symbol for Cisco, and I can see that earnings are confirmed because there's a check mark there for November the 13th. So Cisco looks real nice. Now, the question is, where can I put my line in the sand? So I'm looking at 53 here. So, why am I picking this level here? Well, let me zoom in a little bit. The reason is that there's resistance right here. All right, so that would provide us a level of protection in the event the stock comes back down. So that's as close as I want to get. Let's call that 53. So 53 is as close as I want to get. However, you could go a little bit closer if you want, but I'm just not super excited about getting too close. You could, though, reasonably sell right here at 54.50. I'm going to see if I can get it at 53. So I want to give myself a bit of room. So in case the stock comes down, it'll have to break below this mega strong support level now in order for us to get into trouble on the downside. So let's try it out. Let's see what's available in Thinkorswim, a simulated platform. Let me go to trade here. Now, let me just go take you through the process. Okay, so ideally, I like to do the 16-day options. So those would be November the 1st. Ideally, about 2 weeks of time, sometimes more time, sometimes less time if you can get enough credit. So normally I start here on the, let's call them 2-week options, 16 days, roughly 2 weeks. And just to refresh your memory, I'm thinking about 53. I'd like to see what's available right here at 53. So then I can just build this little setup here, and I have it here. Now, what I see for November 1st expires on 10/16. I'm selling the 53 puts. That's the line in the sand. And then I'm going to buy the underlying put. Now, the minimum credit that you should accept is 10% of the spread width. So 53 minus 52 is $1 of spread width. Multiply that by 10% and you get 10 cents. And I can see very clearly here that there's only 6 cents. So what could I do? Well, I could sell more time. I could add another week of time value into this spread and increase the credit. So let's check it out. I'm going to take it to November the 8th, and I see 10 cents credit right there. That's my minimum. That's what I want. I'll now position size this to 5 contracts, and this is the order. I'll give it to, actually, let me give it to you here. This is what I'm going to do. 53.50 put for November the 8th. Okay, so this is the trade I'm about to place. Actually, I'm going to do the 53s here. 53 put, 52 put. All right, and we're going to go for 10 cents. Let me check. It's still available. It is. Sell the 53 by the 52, 10 cents credit. And this is the order. So sell to open the Cisco November 8 53 put, buy to open the Cisco November 8 52 put, get at least 10 cents credit. Let me send it in there. Confirm and send. Go back to monitor here, and let's take a look at what's happening. All right, it's at 9.5 cents. I'm asking 10. I'm going to let that sit. Good chance that'll fill here in the next handful of minutes. Don't go chasing too much. 10 cents is our minimum. I don't want to go any higher. So we're going to let that just do what it do. And very likely we'll get a fill on that one. All right, there's your first one. Now there's another here. Lending Club. It's got a score of 77.6. That's higher than 75. So yeah, I'm interested. It's got a score of 78. It's in the financial sector. And banks are on fire. Financials on fire. And we got a higher high today with a 78% confidence that it's going to hit 1436. I love this one. I love it. But check this out. If I go into check the earnings on this, you can see that earnings are scheduled for October the 23rd. That's next Wednesday. I can't do it. Don't do it. IV will rush into this one as we approach the next Wednesday. And so that hamstrings the credit spread, doesn't allow this credit spread to devalue as much as we'd like, and just not a good idea. Now, Ryan, I meant to say this earlier, but we have a little graphic about bank earnings this week. And if we could throw that up real quick here. These are, now earnings season is on now. We are in the second week of October. And, you go back last week or maybe a month ago, you wouldn't see anywhere near as many as these. And notice the banks on Tuesday: Bank of America, Citi, Schwab, Goldman Sachs, Morgan Stanley happened this morning. That stock gapped up. Bank Corp, U.S. Bank Corp, that gapped up today. Discover Card is after the market today. And then on Thursday, we have Blackstone, before the open. And that one is a financial stock that could very well gap. And in fact, Ryan, we may even take this one on Thursday morning because the news will be out before 9:15 when we start the Sniper Show. So that's a very good possibility for us. And then you have American Express on Friday, and then a few others like Netflix and Intuitive Surgical and Schlumberger and Procter & Gamble. Those stocks tend to gap at earnings. So the point is that now that we're in earnings season, there's going to be a whole bunch of snipers. So the call to action then is for you to join Ryan and I tomorrow morning, every Thursday morning at 9:15 Eastern Time, where we snipe live. And I have a feeling we're going to see something in either Discover or Blackstone, or maybe both, Thursday morning. And maybe now, Ryan, is a good time to talk about how we're doing on the Thursday show. You mentioned it in the beginning. We have a 91% win rate. Our average gain is 11.83%. And the average hold time for the trades is 5 days.
Something went wrong. Please try again.
Oh, Siri's talking to me. Be quiet, girl. So we've had 45 total trades, 41 of them winners, only 4 of them losers. We have a 91% win rate. And this is what Snipers does for the most part. The average run rate is typically 90%, average hold time 7, average profit per trade 10% every 7 days. Do that, take the same money and do that 4 times in a month. And that 10% is obviously multiplied by 4. And ladies and gentlemen, that is a beautiful monthly return on investment for any options trader. All right, Ryan, do we have any student questions or stocks to look at?
Not seeing any quite yet. If the spread has moved, somebody asked if the spread has moved so that you can get out by just buying the short. Would that be better? I think that was in reference to something we were talking about earlier. I forget exactly what though.
Yeah. Let's pull up. Let me pull up one here. Here's Comcast. So let me show you why that's not a good idea. Okay. So on the exit date on 10/15, let me just start over. So we sold the 40 put and we bought the 39 put. All right. So that's a credit. We sold, we got 27 cents. We spent 14 of it to protect ourselves in the event the stock tanks. So that's risk management. It's an insurance policy. And then the idea is, having sold this spread for 13, buy it back for 10% or a penny, good till cancel. So here's what we did on the day we exited. This was a fill in Thinkorswim. We bought back the 40 put for 13 cents. And we sold the 39 put for 12 cents times 5. So if you just leave the short, if you take the short off, you're left with a long put at 39, and that would equate to losing $12 by expiration if the stock was above 39. So you don't want to leave that money on the table. So the answer to the question, it's a good question. You're thinking about credit spreads. I love it. But you got to maintain the integrity of the spread. You don't want to leave some money on the table. If you had done that, then we would have lost 12 cents on this and ended up breaking even on the trade. So close both down, open both of them together, close them both together. Good question, Ryan.
Gotcha.
All right,
Gotcha. Got another one that's ABT.
Abbott. Yeah, let's take a look at ABT. Let me add it. Let me go back to the watch list. I didn't see this in the AI signals. It isn't for today, for sure. Let's go to Abbott Laboratories. Let's see what it looks like. Interessante. You know why I said that? Well, look at 118 up here. 118. Round number. Let me make it exactly 118. You're going to see something really cool. 118. And you can see here at 118, the stock came back down. Here above 118, now below. The stock is currently at 8 cents above 118, having gone higher. And so far, this level is holding. Now, there's no AI signal. Let me just verify for sure, put the AI signal on. There are no AI signals for this one. I can also go back and look left a bit further in time. And now look at that. This is beautiful. This is really, really important. Notice how I drew a line connecting these tops here, and back over here, that exact same line, 118, was support through here. So what's interesting about these setups, and you can see it happen right here. Let's zoom into that area of the chart. So what you can see is when the stock finally broke above 118, it stayed up there for 2 or 3 weeks. It also did that on, look at my fist down here, right under my fist, that's above average volume. So when you get a breach of these long-term resistance levels, on above average volume, the stock tends to stay above that line at least for a little while. And so then you go to today's date, reset the chart here. That's what I'm waiting for. So all of that said, I love this one if ABT closes above 118, maybe 118.50. Not 118.01, but give it 15 cents, 50 cents above 118, and couple that ideally with a little bit of extra volume, above average volume, and then that 118 level then becomes strong support. So for this one, I'm going to write it down. This is a good looking chart. Abbott Laboratories. So I'm waiting for the breakout above 118. And if I see it, then I'll come in underneath, sell somewhere underneath 118 if you can. Maybe just look for these pivot points. Right there, maybe there. There's a good one. Let's practice these lines in the sand, because they tend to happen at round numbers. I'm going to edit this chart, edit this line, and put it exactly at 116. Exactly at 116. And notice support, 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 support. Support was breached. That becomes resistance. The 116 level becomes resistance. It comes back, hits resistance, holds, and then it breaks above. All right, so and then it's come down and tested it, and now it's trying to get above 118. So that there, 116 is as close as I would get, and I would only do it. I'd like, quite frankly, I'd like to be down here at 110, but you got to get a little closer than that to get enough credit. 115 would be ideal, but I wouldn't take it any higher than 116. Right there. So either 115 or 116, but wait for one of two things. Either, maybe write this down, either a high volume close above 118. On that day, I would be willing to place the credit spread. If you don't have above average volume on that day, then wait for a second close above 118, and then the sniper system would say go. Now, what's missing here that we tend to lean on is news. And I don't know any news on Abbott, so I'm going to go into finance.yahoo.com, type in ABT, and then you can get news anywhere. Your broker has news as well. And then we can see here that Abbott Laboratories raises its outlook on strong medical devices sales. Wow, that is very good news. That happened 12 minutes ago. So that's enough news to really be interested. And then I've got to check earnings, which happened today. Yeah, happened this morning. So earnings has happened. Good looking setup, but we've got resistance at 118. So the same entry rules apply. The same entry rules apply. We don't want to be in a credit spread at 116 if the stock is having trouble getting above 118. This line, this is what happened the last time I did it. You don't want any part of that in the event the stock retraces. Okay? So really, really, really good setup. Really good news on the stock. But we got to wait for 118. Whoever brought that one, really good setup. But be patient. Wait for a close. High volume close above 118, or two closes above 118, maybe with not extra volume. That one's on my list, man. That's a good one.
Nice. Awesome. That's all we got so far in the chat.
All right, ladies and gentlemen, another week under our belt. Remember, tomorrow we have the high probability short-term snipers show with Ryan and I. We haven't mentioned the guidebook. Ryan, maybe we could just quickly mention the guidebook. If you go to the HUBB channel and you find snipers, you can download this guidebook, and it is a roadmap for everything that I do live on Wednesdays for this show and tomorrow morning. It's a free show. Please come, perhaps get the guide, go through the system, and then you'll be able to follow along and snipe with Ryan and I every Thursday morning at 9:15 Eastern. All right, Ryan, that's a wrap, brother. Thanks so much for your support. Love all y'all. Have a good week, and we'll see hopefully most of you tomorrow morning at 9:15. Have a good one.